Now, okay, good morning, folks. It's going to be a brief session this morning. There's not a whole lot to go on. I was hoping it'd be a little bit more clear than what we have presently, but the dollar index, let's take a look at the daily chart real quick. Okay, now I'm going to explain something to you that will lend well to you avoiding problematic market conditions like we have today. Get myself here comfortable. The we have layered order blocks on the daily chart here for the dollar. Okay, and the down candle before the up move here, we're trading inside of it. This down candle, okay, prior to the up move, we're trading inside of it as well. This down candle in here could still end up being tagged or blown out. With the rate announcement for the CAD, dollar really likes and is really sensitive to the Canadian dollar's interest rate announcements. The actual intraday price action for this specific day is so mixed that I can't come up with a clear pattern to trade on. I got mixed signals on euro. And personally, I think it can come up here and clear the buy stops. Originally, what I was asking the market to present me was I wanted to see it come down through the order block here. Once it come down, I was waiting for it to come up and either retest this down candle. Okay, we can treat that as a mitigation block, and it didn't do it. It came down, recapitalized the order block, came right back to equilibrium. So we're inside this consolidation. The way it sits right now, and I'm not touching it, okay, I'm just saying that I think personally, and we can monitor this and study it today, I think what's happened is we came down, clear the stops below the marketplace. Now they're going to run the buy stops, and it may require 10 o'clock for that to happen. And if it doesn't, if it just slips down through here, then I don't care. You know, I'm not trying to touch it. I know some of you are going to be watching every single day with the expectation that they're going to do something. Every single day we're going to be doing something in terms of entering a trade, a demo, exercise, something like that. Sometimes it won't manifest, and the reason why is because either the technicals won't be as clean as I prefer them to be, which is really the focal point of why you're in this mentorship. You want to be really loading your trades up on conditions that have a little bit more favorable probabilities. Right now, I'm going to give you the two scenarios that I think may happen for the dollar. We may snap up in here on the 10 o'clock rate decision for the Canadian dollar. And if we do that, obviously that's going to send shockwaves for fiber to come down into this void in here. If we see dollar just expand down lower, then we're going to be aiming for what we just discussed last night, potentially running on these lows down here. I generally don't have an issue with getting in ahead of a big impact news, even sometimes interest rates. I know there's a lot of folks that are just afraid to do that. When the technicals are really clean, that means that there's really a discernible order block or a range that just recently closed in. It's very easy when it's that clear. But when you have things where we could come down here and clear these lows out, or we have to contend with these layered order blocks in here, each down candle in here could very easily cause this dollar to rally up and close in some of its range that posted yesterday. So while one could argue and say, well, that's the condition on every day, you don't know what it's going to do up or down. No, that's not entirely true. When you understand institutional order flow, it'll give you a lot of confidence to trust where the most likely direction is going to be. And today doesn't present that to me. I don't have that for today. And we've been pretty confident for the last week, really, that every day where the market may reach for, and today's my first one since we started meeting together where I just don't know. And because I don't know, um, I have to sit on my hands. And regardless of what the market presents, after the fact, and if it moves around a great deal or if it doesn't do anything, either way, I'm going to be content with staying on the sidelines. And I would advise you to do the same thing today. But some of you won't listen. You're going to do what you want to do. But the cable may come down and run 33.40s. So 133.40 to 133.45 may be in jeopardy on the downside. I'd rather see it actually just come up and snap right on through the 134.20 level. I'd like to see it get up through here, 134.30, and make a run on these buy stops up here. And then if we do that, we'll probably be in line to go for the longer term liquidity void we talked about on the daily chart, the day that the Brexit vote was cast. It's very yes, it is, Ian. When you're first starting, Ian makes a comment saying that sitting on his hands is a very important lesson. It's very difficult. Developing traders will have a great deal of difficulty with that, and I was no exception. So I don't want to spend too much time jawboning about nothing today. I will be monitoring certain things throughout this morning as we approach that 10 o'clock. If there is a condition that may be still salvageable, here's that run on that 133.45 level we just talked about. You can get really burned on a day like this. Really, really easy. As we approach the 10 o'clock hour, we will start talking about the Canadian dollar because that's where all the focus is today. And before I close this specific broadcast here, I'll take a look at what CAD is doing, what it's most likely going to do after its rate announcement. Watch that 133.45 level. Yeah, I haven't forgotten. I'll explain why the 5-minute order block on cable was something I was watching last night. I wouldn't even scalp in this condition. The question was, is this a good condition or profile to scalp in? No, because it's too easy for it to go. Well, you're seeing it now. It'll go below lows real quick and then snap back up. And how much movement's really happening? Is it really worth the risk of taking on, real monetary risk to get what, 10 pips? It's not. It doesn't pan out in terms of good money management. Yeah, Kane, I see your question. I'm going to talk about the 5-minute order block I mentioned last night in the recording. You see that? Whip down below the lows here, just by a little bit, and snap back up in the middle of the range between this high and this low. So we're back in the middle of equilibrium. Take a look at Euro real quick. Gun to my head, I think we're going higher on Euro. And it may be because Euro pound may be poised to go higher today. We have a liquidity void in here, 84.50. 84.50 is likely as an upside. That would clean up this real clean double top. And hang on one second, Bella's outside my office door. I gotta let her in. But don't let her in, she'll bark the entire time. Okay, thank you for that. For those that are interested, most of you probably aren't, but Bella just started her first heat, so not fun. But cable, I really like the idea of the announcement on CAD interest rate. I'd like to see it influence the British pound to make a run on these buy stops. Watch that 33.45. So we had two runs below these lows in here on this candle, and the one we're in right now just wick down through it again and right back here. So it looks like they're reaching for stops below the marketplace, which I really like that because it really loads the gun for potential run on these buy stops up here. I would much rather have it come down, clear out 33.45. Dollar's still in a tight consolidation. The other scenario with that was, I was going back to this discussion here, the dollar with these layered order blocks, if we go into a 4 hour and then 1 hour, okay, we have essentially cleaned up this liquidity void. I'll go back to 33.45 in a second, Arnold. The range in here has essentially been cleaned up. So we do have a little bit of exposed range with this low in here. That's what I was noting on this chart. Where's it at? No, I was on the dollar. Michael, what am I doing here? That's it. There you go. This area in here, I think, is the most sensitive for today. So if we see any upside, I'm going to be really monitoring that. If we get through this area here, which is framed by this low, your low may not be the same as this one, but for this feed, this is what I'm using for analysis relative to the dollar. I don't know if it's going to have any legs to get up into this part of the range, but I like this portion in here. And watch the buy stops above 112.66, so 112.70 to 112.80 may get stung today on euro dollar. Even if it just rolls up there, hits it, and then falls down, collapses, and closes in its range, these buy stops really look like they're going to be tagged this morning. The question is what makes this area down here so sensitive? Because this low and this entire void where price drops real quick, whenever we talk about liquidity voids, for instance, all this range in here, real quick movement, the market likes to come down and fill that in. So while it's real quick and runs up, eventually it'll come all the way back down and close in these real big candles. Okay, if it's a series of big candles going up, the market likes to come down and fill that in and then go higher eventually. Not always closing in the range and then going higher, but liquidity voids is just basically a big quick run. Inside of each liquidity void that you study, all of this is exposed range, but it's already been traded 2 times now, this whole range in this darker shaded area, because of this trading here. While this was thin, that's why I'm saying this still could potentially come back up and close that if it gets a bullish run. But it's more likely to close in just portion of the range here because you have to stop it here. So all of this area here has been traded in basically in 2 periods. During this time, it traded through this whole entire range, and then through this right here, it's been traded. Down in here, once we broke this low, here, the only exposed ranges now is this portion here, because there's nothing over here that it's traded to twice. You follow what I'm saying? So in other words, this is exposed, so we could potentially come up and hit that if we get it at all. But Euro, you're watching Euro now. We're watching 30. What am I saying? 112.70 to 112.80 for euro dollar. I like 133.45, or I liked it rather, for it to have come down here and clear that out, because it would take us down into this low. Because there's nothing else where the stops would be resting since we've been coming down. The void has been closed in, all that quick range. We've already came down through it. We broke through this little consolidation. This order block here is where it actually hit. So let's take a look at that. You can see the response. We hit that right here. Boom. The initial is gone. It's no longer influential. So I'd have rather seen it come down and run that 133.45, because that's that low right here. So stocks would have been resting just below that. So I would have been more inclined to take a long had we punched through that and then rejected. And then I'm going to look for a bullish order block to trade into. And it still could happen right now as we're talking. But nope, Euro just doesn't have any legs yet. I don't know, I mean, I think that this is just winding up for a quick jump up here. And then that would also close in the range for US CAD. So I like 128.95 to 129 big figure CAD. I think they're holding it in a real tight range like this. I mean, look how long it's been sitting in this range. Personally, I think what may end up happening is we'll do this. It'll jump down below the low and then quickly come back all the way up here and close in the range. And ultimately, if it comes above the swing, this shoot through this high here to take trailing stops, that may be what we see. If we get a run up here initially and keep the lows intact, if we run up, clear these highs out, and then it may just roll down and go through it. And that would give the clearance for cable and fiber to run for upside objectives if it did that. But I personally think this is what's actually happening. They got a lot of folks in here believing this is a short-term support. If they run through that it would get all those longs neutralized and get folks trapped on the short side, and then roll them across the coals and closing this void. And ultimately, I don't know if it has the steam to get through 129 this morning, but that's the scenario I'm looking for, or at least watching. Yeah, still stuck in the mud. It's still waiting on the interest rate announcement for the Canadian dollar. So I'm going to take a break here, end this one, and real quick, I'll toss this in closing. I promised I would talk about this. The 5-minute order block I was looking at here, when we were looking at the 15-minute chart, there was a consolidation in here. How the gap, I'm sorry, the candles overlapped in here, all in this little section. Whenever you see that, I like to look inside that and see if there's any order block that I could use to frame the trade. So I went down to a lower time frame, and you see the down candle in here. We're looking at the middle of that candle as a potential area to watch for sensitivity. Only had a little bit of a minor move in here, but nothing, nothing real earth-shattering for London, except for the void closing. And I told you that if it did that, I was going to not be interested at all. And indications going into Europe last night suggested that it may do that, and I don't want to be selling pound. Let's just put it that way. And that's the reason why I didn't do it. It's easy to go back in hindsight and say, well, I could have did this and could have did that. I'm personally slanted with either looking for a buy in pound dollar or staying on the sidelines. I don't want to arm wrestle with this one because I think they're going to want to try to take the market higher. Take one more quick look at euro. Yeah. Bearish order block. Yeah, I don't know. I don't know what we're going to see today, so we're just going to wait for the rate announcement and see what gives. But I really would like to see something for pound dollar for a long, more than anything else. That's what I'd like to see. Just because those buy stops look just too obvious, too clean. And the problem is we may not get that much of an opportunity. If the rate announcement comes out, it may cause it to go, you know. Yeah, they don't offer it. I was going to look for another pair with the Canadian dollar, but they don't offer it. Yeah, if this would have came down and hit this and ran through it, as it was hitting it, I would have went long right as it hit it. As it is now, it's just not enough of a move lower. So I think they've left these stops intact. It can run from here. If it's going to go up, it doesn't make a difference. It didn't come down and hit these stops. It did hit an order block, but I would much rather had it. If it's going to come all the way down here, come back for stops. Don't just come back for the void. Come down, take some stops out. And then it'll really energize it to go higher, because what they have done, if they take this low out, or if they would have taken that low out, it would have indicated that they wanted to knock out those individuals that are already long. And if they're wanting to knock those individuals out, and we still are primarily bullish on the higher time frame daily, it's just like a loaded deal. The market will want to run for the higher end liquidity, which is the buy stops here and here. And then ultimately, if it gets through here, it's going to reach for those objectives we referred to the daily chart last night. So let's take a couple minutes break. We'll come back in about 20 minutes or so and continue. Again, if you're asking questions, I do get the ability to log them. So that's what I'm doing now. I'm saving the questions log. All right, so we'll see you in a couple minutes.